Good morning and welcome back to Almus Market Mornings. Well, here we are, just a few days after the August 1st deadline, and it seems President Trump hasn't taken his eyes off India. The latest tweet threatening India with substantial tariffs for the purchase of Russian oil. Ministry of External Affairs has noted this and released a statement highlighting the differential treatment India is receiving on account of the Russian energy purchase. For markets, this brings another set of uncertainties. Rupee trades weaker as markets expect some of it to hit our trade. Good morning, JK. I think the key question in everybody's mind would be with respect to the rupee, the break of 88 and the story after that. What is your assessment on the situation ahead?
Good morning, Swaraj. See, most of the times, we see markets moving when there is an economic data or an economic event, and we generally prepare for such volatility. But nowadays, even on days when there is no data or scheduled economic event, markets move big because Trump is there. And that is what happened yesterday also. And his constant tweets and statements are keeping the market on edge. And yesterday, of course, he was targeting once again India. We'll come to that. Of course, we also, have had the labor market weakness in the US on Friday, which still had an impact on the overall sentiment. Um, the yields slightly recovered, but again fell back because now market is actually some in the market are actually expecting three rate cuts or 75 basis of rate cuts. It could be 50 in September or 50 in October, followed by another 25, or it could be 25 in three meetings. So essentially, Fed could be forced to change its stance. That's why. So one more factor that is supporting this change is that the uh, Fed governor Kugler, who resigned, he is being replaced very soon with another member, which will be appointed by uh, Trump. And obviously, this member is also going to be on the dissenting side. Then we will actually have historically unheard of three dissenters. Eventually, it could force the Fed board to reconsider its stance. We also had one more member, Mary Daly, on Monday saying that given the mounting evidence of US job market softening, and no sign of persistent tariff-driven inflation, time is nearing for interest rate cuts. So the number of people who are supporting rate cut in the Fed are actually now increasing, and it will be very difficult to see how on September meeting the Fed could hold off, and it needs to have a very strong argument for holding off a rate cut, unless the upcoming inflation numbers in August and September, which will come ahead of the Fed meeting, shows the price levels, or rather inflation rate, rising too high. If it remains at current level, I would bet on a rate cut in September. Yes, the markets have, of course, now yesterday considered the other side of the event of Friday, because Friday, the fear of economy slumping bigger led to stock market sell-off. And yesterday, they were looking at the positive side. This means that there can be rate cuts, and the rate cut means the stocks will do well. So, in any case, it was a bargaining day for the markets, and we saw most of the losses on Friday being erased yesterday in yesterday's session. That also had some positive impact on other markets. Uh, Suddenly there is also a focus on Switzerland, because US has slapped one of the highest tariffs at 39% on Switzerland. Reacting to what it called Switzerland's refusal to make meaningful concessions by dropping their trade barriers and calling their relationship one-sided. So the duties are expected to go effect on Thursday, that's the 7th. Parliament is actually met to, come back with better concessions to the US. So basically, they are reacting to the Trump's threats because it's an economy that has a 39 sorry, it has a huge export of nearly 40 billion net surplus to US, and they are definitely not going to leave with the 13% tariff. So Swiss francs for a change weekend, even though other currencies were stable. So that's one thing. And on the other, likewise in the currency market, the yuan fixed today at 7.1366 has been the lowest fix that we have seen since November 2024. Now, overall, although the dollar fell on Friday about 1.5% against the euro, around 2% against the yen, it still is trading actually consolidated because the strong gains. Then again, waiting for more news from the US economy. The strong gains were consolidating, no reversal, but yes, there was more consolidation than. Uh, we could see that the emerging market currencies also gain a bit on the basis of that. But I think most triggers, or I would say the next trigger should come from a firmer indication about the monetary policy change that is being expected from the US. That will be evidence only with more economic data. Yes, coming back to India, yes, it was another tweet from Trump where he said that India is buying massive amounts of Russian oil and just selling in open market for profits. And he's also made a very strong statement that Indians don't care about the people, huge number of people in Ukraine being killed by the Russian war machine. No. So this will make him substantially raise the tariff paid by India to the US. Market obviously became nervous of this statement. However unjustified it could be. So we saw the USD INR soar in yesterday's offshore trading to above 88 for the first time, although it has now come below 88 and trading around 87.90 levels. And the reaction was to be expected. At the same time, we also had a statement from the government official in India where they could actually, put the record straight. And if you look at the statement, it clearly says how India has been importing an oil for its large population consuming, which is an essential commodity, while the other countries are not importing. So they also continue to import from Russia, but not so essential commodities. But that's how they have tried to put the record straight. But if sincerely viewed, there is no justification for sanctions on India based on the Russian oil import. But these are geopolitics, and we don't know what kind of stand different people will take. But I am seeing some sort of increasing voices against the American stand on various matters. So that's a big development in the global scene that we have to keep watching. Yes, we have seen large swings in the USD near the all-time highs. Yesterday, we dropped to 87.12, courtesy some weakness in the dollar, but that was seen as a golden opportunity for buyers, and really consistent buying yesterday from various quarters, including IPO repatriation, IPO money repatriation, and then oil companies buying, and of course importers also latched onto the dip, and we saw almost 87.70 in onshore market, 88 plus in the offshore market, cooling off. Now, as dollar remains overall weak, I expect RBI to be actively intervening at these levels. That's because the rupee is actually tending to get more undervalued now. So that should be in the minds of the policymakers, unless there is any big, large outflow. I think 88 plus should hold for the time being. And then we will see how things move, because I won't say 88 will not break ever, but it could break in the coming days based on some news or some other development on the geopolitics. But for the time being, it looks safe. Just we have to wait and see how RBI behaves. RBI acts today. I would say exporters should consider hedging some of the near-term exposure at these levels. Thank you.
Thank you, Jake. And of course, apart from the developments we are focusing on in the domestic markets, few key things after the job market report which we discussed yesterday. Number of Fed members favoring rate cut is increasing. Mary Daly joining the rate cut crowd. We are seeing dollar broadly remain weaker globally. Yuan fixed at 7.1366, which is the strongest fix since November 2024. And of course, we had the Swiss franc weaken yesterday after a 39% tariff has been imposed on Switzerland. So these are the key narratives apart from the focus we will have on India-specific updates. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.